Good afternoon, traders. Welcome to it of special edition of Stock Market Movers. Normally we go from 1 p.m. to 2 p.m., but I thought I wouldn't leave you guys hanging. We're going to go from 12:30 all the way until that 2 p.m. time. So got another great one for you guys today. We're going to talk a lot about what happened in the PCE numbers there and what does that mean for inflation. What does it mean for the Fed moving forward? We'll take a look at what was hot and what was not today. We also will take a look at all the earnings. We got Apple, Amazon, Roku, Intel, U.S. Steel, Procter & Gamble, a couple of oil plays like ExxonMobil, Chevron, Phillips 66. We're going to go through some of those. I also want to bring in some Tesla news. We got to watch what happens. Will they do the stock split? That should pass. We're going to talk a little bit about that. And of course, I did see that the Elon Musk Twitter trial will start in October 17th. We'll talk a little bit, of course, about the inflation. Of course, the Inflation Reduction Act is definitely hitting it. We'll talk a little bit about Michigan consumer sentiment. And I got 3 interviews for you guys throughout this 90 minutes. So stay tuned right here. This is where you guys want to be on Stock Market Movers with Money Mitch. Let's dive on in.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, let's go ahead. Let's start diving into today's show. We got a great one for you. 3 guests on that will be just joining me in just a few minutes. We're going to talk to a trading mindset coach. Yes, I said it, guys, so stick around for that. I always think it's important to be on top of the mindset. Take a look at trading psychology. We're going to be diving into that in a little bit with Agnieszka Woods. Really excited to dive into that. But let's first touch a little bit of some of the topics that hit the tape today. Of course, we got core PCI to start coming in here, and it was estimated at 0.5. We actually got 0.6. Let's see how this affected the market today. We're actually trading on up. And this is actually a little bit surprising. You know, I thought this would knock us down a little bit, but just want to go ahead and state how I'm seeing it. Right now, we're seeing the SPY trade at the 409.50s. Let me actually put that on up here. There you guys see it where it is right now. And so what is this really going to show us, right? Well, one thing that we were watching for in the core PCE price index was, of course, you saw Powell talk about PCE and how this is the number that the Fed watches and focuses on. And we were looking to see if we got inflation peaking or not. Because, yes, there's been a lot of talks that inflation is peaking because if you look at the prices of oil, you look at the prices of the commodities, but is it showing up in the data? That's what I wanted to see. That's what I know Powell wanted to see, and that's not what we got here. So the core PCI coming in at 0.6, higher than the estimate and higher than the prior month, just shows to me that, you know, at least in the numbers, it doesn't state that inflation is peaking. And stated again by Jerome in the conference, and the conference that just passed, was that we are going to be data dependent. And so in my eyes, this still leaves room now for the Fed to continue pushing forward with their rate hikes. Of course, we're going to be getting into the midterms, so some people are going to think that they're going to take a kind of a pause there. But you never know right now. I mean, at the end of the day, I think inflation is the goal really to knock down. They need to get it coming on down, and at least the PCE not showing us that good sign. And of course, we're not going to get the next PCE month over month number until after the next meeting. So I think it's something to keep on watch. Of course, a lot of people watch CPI, but mentioned multiple times was that PCE is the focus of the Fed. We also got Michigan consumer sentiment numbers. I think this matters also because we're starting to see that sentiment is changing. I think this is important to keep on watch because what this shows us is that, yes, we are starting to feel, at least overall, the consumer is starting to feel like inflation is peaking a little bit. Will we get that to show up in the numbers? And I think that's what everybody is looking for. Economists are looking for that also, so that they can say, yes, inflation has peaked. But we'll keep watch what happens there. Consumer sentiment coming in there at 51.5 versus the 51.1 expected. Prior was 50. Going down on this is a negative. So towards the upside, this is a good look as you got a 51.5 reading in the Michigan consumer sentiment data. Of course, the SPY is pretty high up there towards 409. I didn't see it getting past the 410. So today it actually did get past that. It got up there to 410.99s. We'll see if it can actually hold up here and continue the week next week, actually up at this price point. That would get me a little bit excited as we'll start flipping, especially if we get through 418. All right, so that's going to do it for the overall opening welcome here. Now I want to dive into some trading mindset talk. I'm about to bring on a guest for you guys to continue working on that psychological abilities. You know, one of the things that I always say is that trading is fun. You know, I can kind of teach people a setup and tell them that this is the setup. But the real question is, can you develop the mindset to trade that strategy is so important. We're going to dive on in with our guest coming on up. I'm going to play a quick trailer and we'll go ahead and get our first interview started.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, let's go ahead and give a warm welcome to Agnieszka Woods here, trading mindset coach. Excited to have you on. Welcome to the show.
Thank you so much for having me. It's really a pleasure and an honor, first of all. So thank you for having me here. And hello, everyone.
Definitely. I wanted to bring you on, talk a little bit about mindset. First things first, tell us what you do as a trading coach. What does that entitle?
Yeah, so it's actually quite simple how I see it. So we have our mindset, which I always see like our mind is set to a certain way, in a certain way, right? How we behave, how we think, how we do things. And what I help traders with is unsetting that mind, because the way that we do things in our daily life is very different from how we should do things in trading. So those ways do not really translate one to one, and I help them to unset the mind that they have currently functioning according to, and then setting their mind to the trading, basically.
Perfect. So essentially, I mean, we're developing kind of a trading persona, would you say? And why is the trading persona and having that so important to traders?
Yeah. So throughout our life, we always create a certain image of ourselves, right? How usually it is not how we are, but how we like to see ourselves. And then we try to prove that image right. And, you know, we come across our ego. We get very defensive when there is something that says to us, this doesn't fulfill the image of the person you want to be. And that fight is coming out while we are trading. So trading persona is actually the person that you need to become being a trader, because it's a very different type of person that can be successful in trading than the type of person that can be successful in daily life. That again, the way that we achieve success in our daily life in business is very different from how you think and how you act and how you achieve success in trading. So that trading persona gives you a kind of a compass and a picture and an image of this is how I need to become in order to be successful in trading.
Definitely. Now, that's one thing. Once we start developing that trading persona, what are the next steps that we should take as traders to keep pushing forward?
So first, when you have the picture of the trading persona, right, you say, okay, this is the set of beliefs I need to have. This is how I need to guide myself while I'm in a trade. How do I have to think and how do I have to act? Then the next step is to take that discrepancy between the person you have created for yourself, you think you are, and the trading persona, and bring it closer together. Or in fact, I should say, let the beliefs and let the way of doing that do not serve you at right now in trading, and start integrating the beliefs that support your trading into your life. And it's not just in trading, because the beliefs basically is, there are very strong thoughts. These are the beliefs are directing everything we do in our life. And those beliefs, once you integrate them, and they will help you trade successfully, it will eventually also have impact on your daily life. So if you say, what is the next step, is really letting go of the old ways of doing and thinking, and going towards the trading persona, the trading mindset, as I would call it.
Definitely, I agree with that. Now, how do traders start building up some body intelligence to be more successful?
Yes. So, there are a lot of different tools, right? On the market, you can buy heart rate monitor and all kinds of things to help
I've
you
actually
trade.
done that, believe it or
Yeah.
not. Yeah.
Yeah. I like to approach things from a holistic point of view. And I think our body has its own intelligence. It's, it directs a lot of processes without us even knowing. And listening to what your body tells you, and learn how to regulate your stress level, how to regulate the concentration level with using your body intelligence, that helps incredibly to actually stay focused, concentrated in your high performance zone. Because let's face it, every day you come to your trading desk, this is like your performance, right? So that's when you have to be the most effective, and everything around it has to support it. And if you don't give your body what it needs in order to support you in those efforts, your performance will suffer.
Now, I'll tell you a little bit about myself here. One area that I used to struggle with a lot is missing. And what I call missing is, setting up the trade, knowing my levels, but then being hesitant when it comes time to actually pull that trigger for the entry.
Okay.
What are some of the tips that you would give me to kind of get around this?
I would ask you first, like, where does this come from? So if what stops you from pulling the trigger? Because the thought that comes into your mind at that moment, when you want to pull the trigger but you don't, there is something behind it. And that thought is actually the trigger for you not to do it or to do it, right? So depending on what you are telling yourself at that moment, and it can be different for many people. Usually you're telling yourself something that has to do either with the past, some past experience. You have done this before and this and that happened, so you kind of get into the fear mode. Or you are getting into the future and you think, if I do that and it's not working, all these things are going to happen. And a lot of traders are thinking immediately, putting it into the result area, and start thinking about the money they're going to lose, and not just the money, but like how their trading dream is going to collapse just because of that one trade, instead of focusing on the process. So the solution to that, first of all, is to notice what is triggering you, that particular behavior that stops you from doing it. And secondly, focus on the process. Just purely go back to the steps of the execution, instead of trying to think about the past or the future.
Awesome. I have to say, I definitely think that that's definitely a way to start getting an advantage in that. Now, I'll leave it to you. Last question here. Just what are some tips maybe that you could give our retail traders that you want to mention before you get on out of here?
Okay, so I think one of the most important thing is to start with your mindset transformation is to make the transformation from I want to make money and I just jump in and do some trades, make money. So it's kind of transformation from hobby to a job, realizing okay, trading is actually a job, right? I go a step further. It's not a job, it's a business. Considering trading as a business brings so many positive consequences for your trading, because if this is a business, now it makes you a leader. And what does the leader do? The leader always acts in the interest of his own business, right? So that brings a completely whole new area of thoughts and assumptions and expectations from yourself that is more focused on the process, and it's more focused on what am I going to do in order to act in my own best interest and in the interest of my business. So start thinking about that as a business. And remember, every entrepreneur, when they start a business, they don't wait until they're successful to talk about their business and call themselves entrepreneur, right? They actually do the opposite. They make business cards and they give it to everyone on the very first day, right? They say everywhere, this is my business. So don't be afraid, even when you just started, put yourself in that role. Tell everyone you have a trading business, because then you have this accountability. Then you have this extra feeling of, okay, now I really have to step into the shoes of the leader, of the entrepreneur in my trading business. And this will help you to take things much more serious and not just jumping into trades and spending money for, all kinds of pointless trades without setups, let's say.
Definitely, I would agree with that. The way that I refer to it is be your own CEO, right? I mean, that's a great way to refer to it. And I mean, take it as like if you're doing a startup, because that's kind of like you're doing. This is a new career for you. And you need to, as startup, you need to really focus. You need to be doing the research, understanding what you're getting into. But I appreciate you coming on today, Agnieszka Woods, trading mindset coach. I am going to throw it in the chat here. If you guys want to check out some of the coaching, you guys can go to aheadcoach.com. I threw it up there so you guys could click the link and check it on out. Appreciate you coming on, and we'll definitely have you back on.
Thank you so much, Mitch. It was a pleasure. And thank you guys all for listening. Have a great day.
Awesome. Thank you. And I just wanted to definitely give a thumbs up for that, because I think it's important to somewhat touch some different things. We get a lot of expert opinions where we're talking about the market and we're talking about maybe some Fed talk, but there's nothing better really than working on the psychological mindsets to get ourselves in the right position to have success, right? I mean, it all starts with the mindset. Then from there is all about execution. But if you're not in the right mindset, how are you expecting to have that execution, let alone get the results that you're looking for? All right, let's continue going there. Definitely check that on out. And I'll make sure to include her Twitter there so you guys can follow Agnieszka Wood, Trading Mindset Coach. Let's continue going into today's headlines. And of course, a lot of focus is towards the Inflation Reduction Act. This is, of course, going to bring some kind of at first, it's going to affect Medicare, giving them the power to negotiate lower prescription drug prices. So you guys can focus on that. It also places lower healthcare premiums for the next 3 years for millions of families under the Affordable Care Act. The third thing is that it starts investing here, and that's $369 billion for a grant here to really work, bring and address climate crisis, bring down family energy bills, and try to weather through kind of the inflation that we're going through. It also is going to work to give more of that electric vehicle or fuel cell vehicle a tax credit up to $7,500 for vehicles made in the United States. And so this tax credit already existed. So the real question is, how's it going to affect some of these kind of EV stocks? I would pay attention to like GM. You're seeing GM up right now. You're seeing Tesla trade up right now. This is something that I want to keep watch, because it's something that I think that I've been talking about here. And how's this really going to affect some of these kind of EVs going into it? Will Tesla and GM be able to get some more credits so that they're able to give and try to get more of these consumers to really buy up the EVs? I think it's important to watch. We'll see how this is also affecting some solar stocks. You saw like stocks like ENPH continuing to push up today, solar continuing to be hot. A lot of this also coming from tax credits that are included on this for solar projects, wind projects, clean hydrogen projects, construction projects. So if you're seeing stocks like ChargePoint up, also reasons to kind of think that this is from, of course, the Inflation Reduction Act. We'll talk a little bit more about this as we get more, but just wanted to go ahead and kind of cover it really quickly. All right, let's get out of that. Let's start talking about our earnings stocks. Of course, we had Apple, so let's talk a little bit about Apple here. Let's take a look how it's trading on the intraday action here. All right, so you guys are seeing it trade past my 59 level. This is such an important level. It's a weekly trend that we're getting back above. I've talked about if we could close above 159 today, going to stay in the bullish camp here for Apple. Let's take a look at the numbers. What did we get? We got EPS here at $1.20, beating the $1.16 estimate. Sales were at $82.96 billion, beating the $82.81 billion estimate here. Apple's Q3 Mac revenue, though, was at $7.38 billion, down from $8.23 billion a year over year. Wearables revenue was also down 8.08, down from $8.77 billion a year ago. Now, a note here from Loop Capital's Gene Monster. He said that this is based on what I believe was the most important comment from the call. He stated that Cook's assessment that in respects to the iPhone, there were no obvious evidence of macroeconomic impact during the June quarter besides FX. The segment grew 3% year over year. So it really kind of showed some strength there because, of course, the FX kind of hitting that number, but still the segment grew here 3%. Now, of course, we just mentioned the areas of weakness, which were in those wearables, but especially in home and accessories, which missed expectations by 10%. So keep that one on watch as you're seeing some kind of weakness there in wearables, but we'll see what happens to kind of that area of Apple. But definitely, it was doing pretty well on the report. It wasn't a bad report. It actually, kind of gave them the insight to kind of continue pushing forward, right? I mean, what they didn't want to hear was probably a negative in that segment growing for the iPhone sales, but that's not what happened here. Back up there towards 164. Let's take a look at the intraday action. You're trying to get back towards that pop off the earnings, which is around the 164 level. Let's see if it can get back on up there. All right, let's get out of Apple. Let's go to Amazon. How is this trading on up today? And you can see it's trying to do the same thing, trying to hold on and make its way back up there towards 139. Let's take a look at this Amazon earnings. Adjusted EPS at 18 cents, beating the 13-cent estimate. Sales at $121.23 billion, beating the $119.9 billion estimate there for Amazon. Amazon did state that in the second quarter, net loss included a pre-tax valuation loss of $3.9 billion. This coming, of course, from their common stock investment in Rivian Automotive. Amazon CFO also stated towards hiring plans that they're questioning its hiring plan and likely won't hire at the same pace as it's done in previous years. Another statement here from Amazon was about their web services, but they did expect here to post third quarter revenues between 125 billion and 130 billion, representing a growth of 13 to 17%. Analysts were expecting sales of 126.4 billion here. So definitely raising up there the third quarter revenue outlook. Amazon Web Services came in here at 19.7 billion versus the 19.56 billion expected. And the advertising also beating here at 8.76 billion, beating the 8.65 billion expected. So really, I think that the quarter revenue, just looking at that and not guiding down, is what definitely kind of helped push this Amazon forward. But of course, it didn't hurt that they beat on the web services and advertising, which was also a major focus of analysts. Now you're seeing this kind of bottom out. We'll see if it can get back on up there. Tried to hold the pullback towards around the 135 today. We'll see if that area can hold as support and then get back up there to the 140s. This is Amazon. Now let's keep it going here. Let's start talking about some of the disaster earnings calls. I want to catch up with the chat. What's going on out there? Easy Beach Bum. I see you guys out there. Jesse, I am Chan. Hey, if you're new to the show or this is your first time, say hello in the chat. They're there to help you guys. A lot of these guys trade actively and are working towards getting better. So shout out to you guys. Born, Easy. I see you guys in the chat. Keep working on your thing. All right, let's go towards Roku, which was the disaster earnings on the day. And you can see here, it didn't even want to bounce back one little bit here. Why was this? Well, if you look at the EPS here, missing at 82 cents, missing the 68-cent loss estimate. So it was an 82-cent loss, missing the 68 loss estimate. So these are in the negatives, not what you want to be seeing here. Sales at 764.41 million, missing the 805.64 million estimate. So a big miss on EPS and a big miss on sales. Roku did add that advertising market would continue to suffer in the current quarter and that consumer spend would moderate, which could hurt the company's business of selling Roku TVs and related hardware devices. Roku missed on its guidance and that it would bring in $700 million in revenue during the third quarter and well below the $902 million expected. So definitely not what you want to see there in Roku, lowering its guidance for quarter three. And it just doesn't look good here for Roku. You might even see Kathy might have to get rid of this as you're seeing it just continue to decline. Now we're getting back there towards the pre-pandemic numbers where Roku's given up all that gain they had made. It got all the way up there to 480 or higher, actually. It went to the 490s. If you take a look at what we've retraced about 86% on Roku, and it doesn't look better going forward, right? They said there that they're pulling back their Q3 outlook. So this might help them when they finally get there. But for right now, this is in the gutter and not wanting to turn around. So turn the TV off on Roku because it doesn't look like it's turning back on. All right, let's get out of Roku. Let's get into Intel, which was also not the best report, also leaking there, INTC. Let's get into that. You can see how it hasn't really come back either. Let's take a look at that. Intel here coming in with an EPS at 29 cents, missing the 69-cent estimate. Sales at 15.3 billion, missing the 17.92 billion estimate. So big miss there on the sales and big miss on the EPS. Not what you want to see. Intel CEO said adjusted PC demand is now to the low end of the range of 310 million to the high end of 325 million and down 10% year over year in the calendar year from 2022 from the previous outlook that was at 350 million. So bringing that down at least 25 million there on the high end. Intel now sees Q3 EPS at 35 cents versus the 87-cent estimate, and sales at 15 to 16 billion versus the 18.62 billion estimate. It's really important to kind of keep watch of what happens there, but Intel is just not in favor anymore. It's not sexy. It's not the one with the best performance. I mean, maybe you can think about it in laptops, but in overall desktop, it's definitely lagging behind AMD. I think they need to really focus on really starting to battle with AMD and having better performance, but I haven't seen that be the focus right now. All I see them is trying to continue to milk the brand, and I think they've milked it enough now to the point where it just doesn't seem like it has the innovation needed to continue pushing forward. But like always, you guys make your own investment decisions there on Intel. I know I like AMD better, and I think it's just sexier. All right, let's get out of Intel here. Let's go to US Steel. And yes, X gonna give it to you, baby. We talked about this trade in live trading. Why did we talk about this trade in live trading? Well, a lot of that was based on their earnings. EPS coming in here at $3.86, missing the $3.87 estimate, but missing by only 1 penny. Just want to note that. Sales at $6.29 billion, beating the $5.76 billion estimate. But I was keeping watch of this stock because it was looking good into the earnings. Now look how this reacted there. Now up there towards 23.19. Talked about this really early on that it looked really nice on this dip here towards the 22 where you recovered and you started coming back through that VWAP around the 22.20s. That was the area that we were looking at it for that nice push, and you guys could have continued to get this lift. It didn't only affect X, it affected a bunch of different steel stocks. You can see Cleveland Cliff up today, not a bad one to keep watch, and even Nucor getting off the bottom was going down here right at the open, and then boom, broke right back to the upside. So not a bad day on US Steel, which of course is X, and X will give it to you. Let's go, baby. All right, let's get out of X. Let's continue going here through the earnings. We got a lot to talk about, a couple more to get into before we get into our next interview. That's going to be at 1:15. So stick around, guys. I'm trying my best to get us through this 90 minutes of jam-packed action. That's what we do here on Stock Market Movers, where we give you guys all the headlines that are out there and keep you guys in the informational edge. So smash the like if you guys are enjoying today's show. Hit the subscribe bell below so you guys get notified the moment that we go live. Let's keep the show going. If you guys are enjoying something, or maybe one of these stocks caught your attention a little bit more, let me know in the chat. I'll make sure to do a deeper dive. AMD into earnings will be interesting. I'm more than positive that's Tuesday next week. We'll talk a little bit more about the earnings that are coming up in just a little bit. All right, let's continue going here. Let's get into the next one here. The next one up is going to be Procter & Gamble, and then we'll go into our oil outlook. Let's take a look here at PG. PG actually trading further down here after their EPS here coming in a miss. They did beat on sales, so let's go take a look. Adjusted EPS at $1.21, missing the $1.23 estimate. Sales at $19.5 billion, beating the $19.37 billion estimate. But why is it down? Well, it just doesn't look like the best guidance either. But Procter & Gamble continuing down, and one that I was watching, which was Kraft Heinz. Yesterday, those earnings were really bad. And look how this continued down also. So these are just showing me that it could be that the value trade is off here, and it's all about growth, baby. You know how we'll know? Just take a look at ARKK. If you see that rip on up through the daily level, let's say of 49, and it gets back to 50, you're going to know it's definitely a growth on day, but we'll see what happens there. Out of Procter & Gamble, I want to take a peek at the SPY. What's going on here? We've seen some topping. No, it looks like we're trying to get through that 411. Can we get on up there? We'll see what happens. All right, catching up with the chat. What's up, Miles? How you doing? Can you give me a clear explanation on why I'm green in P&L year to date, but red in PL open? Am I up or down in my positions? So PL open is going to be your intraday position, Miles. So if you're green in your P&L year to date, that is actually realized money versus what you're seeing there probably in your PL open, which is an open position probably that's in the red, but hasn't affected your year to date green because it just hasn't closed, right? And so this is where you'll hear comments probably mentioned, and you'll see it out there that you don't have a loser until you actually close it. This is why you hear that comment. But like always, just Miles, if you don't understand what's going on, what I would suggest, because I'm not a financial advisor, is to call your broker. Just give them a call. There's nothing wrong with it. Hey, why am I seeing this and yet I'm seeing this? They'll go ahead and walk you through their platform exactly on why you're seeing something maybe in the red, something in the green. All right, that's for you, Miles. I'll catch stocks in the chat here if you guys have some, and I'll keep watching. Seth's talking about MRO. Let's get into some of these oil plays. All right, let's first one up we're going to talk about is ExxonMobil. Let's go to that. All right, so full disclosure, I did trade some oil today. I'm not mad at all. Yesterday, I was actually swing trading ExxonMobil, but I closed it to the close and a little upset because, man, I would have been getting in down here and would have been up about 5 or 6% there on ExxonMobil. It's not having a bad day. I mean, you can take a look at it. It's up about 2.6%, starting to make its way back, ExxonMobil here. Let's take a look at the earnings. Q2 EPS coming in here at $4.14, beating the $3.74 estimate. Sales at $115.68 billion, missing the $132.7 billion estimate. Chevron also coming in here, but with a beat and a beat. ExxonMobil missing on them sales, but I don't think they cared much. Let's take a look at Chevron that had a little bit stronger earnings, and boy, did this have a nice rip right out the gates, baby. I was talking about this on pre-market prep that I'm bullish oil still, even though a lot of people aren't at these levels. Chevron EPS here at $5.82, beating the $5.08 estimate. Sales at $68.76 billion, beating the $57.96 billion estimate. Something to keep on mind, right, is why Chevron's ripping so much. Well, those earnings said it all, and it really kind of gave you now that V-bottom outlook. It closed into the shadow, so yeah, definitely found some resistance in that shadow space. Is something that I will keep on watch. As long as we can hold pullbacks towards this 160, we're going to be looking good. It's okay to pull back there. You can see it ripped up above that level. We'll look for pullbacks in the 160, 159 for the buy the dip opportunity, but it doesn't look bad there in Chevron. All right, getting out of Chevron, going to Phillips 66, baby. I wanted to take a look to see if this one could come back. EPS coming in here at $6.77, beating the $5.78 estimate. And seeing a little bit of lift in pre-market. It couldn't hold the intraday, but we'll see if this is able to get back up there through the 89s and close up there on Phillips 66. The one that I traded today was Valero after yesterday's earnings. I was able to catch it from the bottom there of an entry of 109, getting out there above towards the 111.50s. This is why I think it's important to kind of play some of the range. This is what's been helping me, is not being too greedy and just playing the range more like it on Valero. But it wasn't a bad trade. I'm pretty sure probably by the end of the day, I might be one of the only ones that had a really good day on Valero, but not going to get mad about that trade. It was a really nice one there from 109s to the 111.50s. We'll see if this can come on back, how oil continues to work. You can take a look at Gush for the daily action. You can see it's right off the VWAP. We'll see if it can take a next leg up. I'll keep watch on XOM to see if it closes above 97. Chevron, we showed how that was just the leader today. Want to see that kind of get back there towards the 164. If that does happen and it closes up there, it'll be able to close strong, and Chevron will definitely be on the radar. All right, well, that's going to do it for our oil names. Definitely going to go ahead and continue going. I got a couple more things to get into after, of course, after our next interview. We're going to be going into an interview and talking about the current environment. What sectors are your favorites? And, of course, telling me a little bit more about a letter with Warren Buffett. Stay tuned for that, guys. Coming on next, we'll dive on into that. I'm going to go ahead and play a quick trailer, and we'll be right back right here on Benzinga.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates. and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
All right, let's go ahead. Let's bring on Gautam. Baid here is the CFA and managing partner at Stellar Wealth Partners India Fund. Welcome to the show.
Thank you for having me.
Super excited to dive on into today. The first thing I want to know is a little bit more about your fund. Tell me a little bit about Stellar Wealth Partners. What do you guys do?
So Stellar Wealth Partners India Fund is a long-only equity strategy which invests in listed equities in the Indian stock market with a long-term fundamental and value-oriented approach. And this particular fund is modeled after the original Buffett partnership fee structure. So we charge zero management fee and a 20% performance allocation above a 6% cumulative hurdle rate, subject to a high watermark provision. And at Stellar Wealth Partners, we emphasize risk management in a very big way. And we emphasize risk management by focusing on business and management quality, by focusing on a margin of safety, maintaining a diversified portfolio, and avoiding use of leverage, derivatives, short selling, and avoiding all speculative fads in the market. So that is a brief about our fund.
Now, one thing that I want to definitely take a look at is how do you see this current environment? You know, we just recently got some PCE numbers. How do you see the environment?
Well, most of these economic indicators are kind of lagging indicators at best, and the market is a discounting mechanism. The markets tend to look forward, and in the short run, the market is driven by liquidity and sentiment, and both of these factors got a boost after the most recent FOMC meeting, in which the Federal Reserve mentioned that they have reached neutral rate, and that going forward, the Federal Reserve will no longer be on autopilot mode with regards to interest rate hikes. They will be data dependent. And as the inflation comes down over the next few months with the recent crack in commodity, metals, and other agri prices, as the inflation print starts coming down and the Federal Reserve has become data dependent, so the market is basically celebrating the fact right now that the pace of interest rate hikes may slow down drastically over the next few months. So that's why you're seeing a very sharp rebound in all the beaten down tech names. But bear in mind that after every bear market, the leaders of the previous bull market do not lead the next bull run. You generally have a new set of leaders which emerge after every bear market. And that is why investors should pay attention to those companies which are showing very high relative price strength and strong fundamentals in terms of earnings growth and very strong guidance. So it's just not about the stock price alone. You have to combine it with the fundamentals as well. That is how you identify the leaders of the next bull run after every bear market.
Definitely something that we need to keep on watch. So one of the things that I'll ask you is, what are your sectors are your favorites? Because if, you know, this is what you do, then maybe we need to take a look at some of these plays. Let's go ahead and see what sectors you're looking at.
So I primarily track the Indian stock markets. I have looked after the stocks in the American stock market before in my most recent role as a portfolio manager. But at present, I can definitely share a lot of promising sectors from the Indian stock market. And there are multiple structural growth plays available in the Indian market today. They include affordable housing finance, specialty chemicals with critical application, fintech, music streaming, digital transformation, cloud computing, and contract research and manufacturing. In particular, contract manufacturing is a long-term structural trend because low-cost manufacturing is in India's DNA. So as the world keeps outsourcing more and more to India and starts relocating their supply chains away from China, India stands to gain disproportionately. So those are some of the industries in which I'm very bullish.
All right, so let's go towards that famous letter that you got from Warren Buffett. I'm actually throw it up in here in the chat so you guys can check out this letter. But tell us a little bit more about this, Gautam.
So ever since I developed the idea of launching this fund, I wanted to make it as partner-centric as possible. And towards that end, I wrote a letter to Warren Buffett asking him for his feedback. I sent him the details of my proposed fund structure, and he came back with an endorsement of what I'm trying to do. And this particular fund is highly inspired by the original Buffett partnership of the 1950s and 60s, which in my view was one of the most equitable fee structures. You will rarely find such a fee structure in the hedge fund industry today. But in the short run, if you do what is good by clients, then eventually in the long run, your firm also benefits. So that's how basically long-term sustainable funds and firms are established, by playing win-win games and looking after the interests of all the stakeholders. So that is what I'm trying to achieve through this particular fund.
Perfect. Now, the last thing I'll leave you off with is oil outlook, global oil. I think it's affecting every market, right? How are you seeing the situation right now going into winter?
So right now, a large part of the oil price appreciation has been driven by the supply shocks. I think the oil markets will peak as soon as the Russia-Ukraine war ends, because in the short run, these commodity markets are driven to a large extent by sentiment, and in the longer run and medium term by the supply trends. So I think once these geopolitical tensions are resolved, then you would have found a top in oil. Anyways, oil has corrected almost 25% to 30% from its most recent high, and that will lead to some respite for Americans at the pump. So hopefully over the next 6 to 12 months, we'll see much more lower oil prices.
Well, thank you for joining me today, Gautam Baid, managing partner and Stellar Wealth Partners at India Fund. I appreciate you coming on in here and talking a little bit of a mix there. I need to look a little bit more into how you're developing this fund, because I mean, hey, if your letter's reaching Warren Buffett, there's something that's going right here. So I'll definitely check this on out. Appreciate you coming on, and I'll suggest my audience definitely go ahead and check out that letter that I posted up. You guys can click the link.
Thank you.
Have a great day. All right, guys, that's going to do it for our second guest. We still got one more coming on up at 1:45. We'll have G-Day Hatfield, and we'll talk a little bit more about what's going on in inflation. So let's keep going on here, right here on, of course, Benzinga, as we keep pushing forward. Now, one thing that I would definitely want to get into is next week's earnings. So to do that, one thing that I think we should do is learn a little bit more about how you can use Benzinga Pro. But let's go ahead. Let's dive on into that. One of the ones that I'll definitely be watching, of course, on the first, we're going to get a couple of them. I'm going to run through some of these, and then we can definitely take a look at some different ones. If anything's standing out to you for next week, throw it up in the chat. Before we get into those earnings, though, I did have a Twitter headline to run through, Tesla outlook. So let's do that right quick. All right, so let me go pull up the Tesla chart. Here you guys seeing Tesla up there towards 866. All right, let's go ahead. Let's talk a little bit about this. Let me get here the headline here. And so this was, something that I'm going to keep on watch. This is from Gary Black. And so I'll show you guys this tweet here so that you guys can check this on out here. And so let me zoom in here so you guys can read this. And this is definitely someone that I recommend you guys follow on Twitter. I follow Gary Black all the time, and I definitely pay attention to when he tweets. So let's talk a little bit about what he said here. So he talked about the 3-for-1 stock split. He said that it should pass easily, of course, at the meeting on Thursday, August 3rd, and will likely go into effect before the market open on August 22nd. In 2020, he's reminding us how this rose 81% during the 3-week period between August 11th and August 31st, which was leading into, of course, the split. We expect the Senate to approval of the new EV credit before Senate recess on August 5th. And so giving us more that Tesla would probably get some of those EV credits again to go ahead and try to sell some of these vehicles with those EV credits, which definitely helps the consumer demand and keeps it pumping, right? That's what we want. And Tesla, we want to see them being able to continue selling those vehicles and selling them at the high price that they have them. And of course, what's going to help them is getting those EV credits, because everybody loves to get a little bit of a discount, especially when you're getting into EV and super expensive names. All right, so I here have my image. I'm going to pull it on up so that you guys can definitely check it on out. Just give me 2 seconds here. I'm going to add it as an overlay. All right, so let's start diving into these earnings here. Well, I'll go ahead and what I'll do is I'm going to pull up the charts here as we kind of roll through some of these names, and then we can take a look how they're looking going into the next week. So here's our earnings calendar. You guys can find this. I'm going to put this out on Twitter. We put this out every week so that you guys can follow along on the earnings stock. If there's anything that stands out to you guys of these earnings, or maybe a name that you want to take a look at, throw it up in the chat. I'll definitely make sure that we touch it here. All right, so before the open on Monday, nothing really standing out to me that's too big, at least. I won't be going too crazy on before the open. But after the close, we definitely have some big names here. Let's get into maybe 2 or 3 of them. Let's go to AccuVision first. So let's take a look at that. That's AVTI or ATVI. ATVI actually pushing into the print here. So keep it on watch. Let's take a look here on the hourly. It's trying to get through that 80.15. Let's go to the daily. Daily level, you can see how we kind of never came really back to filling in this whole shadow zone down here. Now we've come up. We actually held some of this pullback, pushed back above that. Can we get through that 80.15 to start getting back towards the 83? Of course, this is one that's actually held on in my eyes. If you take a look at the weekly, look how this is held on. Now looking like it wants to come back. This looks interesting to me on the upside. Like always, it's going to be dependent on the earnings, but something that I will definitely keep watch. All right, let's get out of AccuVision. What's another one to keep watch? Well, I would keep watch after the close on Monday, Pinterest, right? Pinterest. Let's take a look there. All right, that's PINS here. You guys are seeing a bottoming here. A lot of bottoming on the daily chart right here. So you guys can definitely kind of take a look at that. It hasn't wanted to break here, the 18. We did crack through it today, but recovered really fast here. So I think it's an important one to watch. Pinterest is one to kind of keep an eye out because, of course, Snap report really kind of hit this hard on the downside. So I'll keep watch to see what happens in Pinterest, but I don't know. Pinterest is something that even my wife doesn't use it as much as she used to. So I'll keep watch to see if this gets back above the 1950s or not. If it does get into above the 1950s, you could make up some of that shadow right above. But let's see if it gets going. And a lot of this is going to be dependent on the earnings. So we'll see how this one comes and reports after the close on Monday. All right, let's continue going here. What other ones catching your eyes? I did see some people talk about Airbnb. That's a little bit later on Tuesday, so I'll dive into that one just coming up. Mosaic is the next one, and full disclosure, I did trade Mosaic today. Not a bad trade there on Mosaic. Definitely not a bad one at all. Was able to get it here on that dip at the gates there. Sell it on up. Highest shares were sold into the 80s here as we got on back towards the high. We'll see if it gets through the high now. Daily chart looking like it's rebounding here. What I like about it is it has the 200-day below it, 9 EMA. What you want to get it through there is that 65 EMA that I have here. Let's get it back through that. The 200-day at least gives me the idea that this isn't a bullish trend and trying to hold that 200-day. Let's look for maybe some pullback to 51, but definitely this doesn't look too bad going into the earnings. All right, so then on Tuesday, what will we get there? Well, the real stocks start flowing through here. Let's start taking a look here. Caterpillar is the first one that stands out. Of course, we're looking at industrial, so let's take a look here. Caterpillar is taking off. If you take a look here at the daily, look at that push. A lot of this probably coming on, of course, the Inflation Reduction Act, giving it a little bit of a lift outlook here, but not looking too bad there in CAT. So Caterpillar getting that lift, that shows me that I should take a look also at Deere to see that continued rise in farming and heavy construction machinery. Keep this on your radar, guys. We'll see if CAT can continue running into the earnings before open on Tuesday. Then, of course, you got stocks like Uber you can take a look at. You can look at Dumont, and you could take a look at BP. There's a lot going on here. JetBlue is going to be interesting. Of course, JetBlue doing their purchase of course, Save Airlines. We'll see if that can come on back. Let's continue going. I'm not going to be able to get through all of these, so I'm just going to try to keep flowing. Marathon Oil also on before the open. That Tuesday is just packed with stocks. Let's take a look at AMD. Of course, after the close on Tuesday, what will happen to this one? This one looks like it's bottoming and looking well. I'm not going to lie. I'm kind of a little upset that I didn't get a piece of AMD when it was down here in the 70s. It's back up there towards 93. If it can get back above 100 before the earnings, oh man, this is going to be looking really good. All right, well, let's see if it gets through that level. Of course, you guys can draw maybe some weekly resistance or weekly trend. Let's see if it gets on up there towards the 97, 100 and start getting up there back towards the 105 on AMD. All right, let's keep going. Starbucks is the next one on there. What happens on Starbucks is going to be interesting. Daily candle, actually, remember, last time it had earnings was right here. It's actually higher than that. So we'll see if this gets hit back down. I'm still bearish on Starbucks, but as you guys can see, I've actually been wrong since last earnings. I thought it would continue on the downtrend, but it's actually came back a pretty significant amount here from, of course, June 16 to where we are now. That's a 19% move on up. Doesn't look too bad right now. All right, comments in the chat. AMD, I saw mention. What silver do y'all buy? I'm only familiar with PAAS. Well, Sabrina, we can always take a look at that. I got no problem taking a look at that. I can actually run through all the silver plays if you want. But we'll do that in 1 second here. Actually, you know what? I'll take a break here from the earnings, and we're going through so much here. So basic materials you can do here. Silver, boom. Highest capitalization is going to be PAAS, right? Another one that you can watch is AG. Take a look at that one. That doesn't look too bad coming off the bottoming of the 650s, really pushing on up. Why is silver up? Well, a lot of this is because of the dollar pulling back, right? MAG is another one. MAG Silver you can watch. FSM, Fortune Silver Mines. This is another one. Cheaper name, right? EXK here, Endover Silver Corp. You also got SVM, Silver Corp Metals Incorporated, and ASM. This one has exposure to silver and gold. So interesting to kind of mention that, but really small name here. Best ones to probably trade, I think, are AG, MAG, and PAAS. We'll see if these can continue to run. I got you, Sabrina. Anytime you need anything, just let me know. I'm here for you. All right, let's go ahead. Let's keep going. I'm going to get out of here. Let's keep going with our earnings talk. Let's take a look. What else is going to be reporting that day? We got Gilead. You got EA, PayPal. PayPal's looking interesting now. We'll do PayPal, and then we'll do Airbnb. PayPal's actually starting to get some bottoming around the 70s. Can it get back up there with some good earnings through the 92 level? Then looking like it wants to really kind of bottom here. Will be an interesting one to watch. It's pulled back significantly from the highs, and I think it could finally find a bottom. All right, let's keep going. Airbnb, the next one after the close on Tuesday. Airbnb, let's take a look at that. This one is trying to come back here. I've been taking a look here. I actually even had this drawn on out, looking for it to come back into that level. So that's the 123.20s. We're still far away from that. I've been talking about that. I've been looking for a move back up there that was going to go above that level and then pull back to that level. We'll see when Airbnb really comes back. It's not having a bad day today by any means. It's really finding some bottoms by the 95s. And now I just want to see it hold 100. All right, let's get out of Tuesday. Let's take a look at Wednesday. You get Under Armour before the bell. You get Moderna before the bell. Let's take a look at two of those. All right, so UA, Under Armour down there to $8. There was a time that Under Armour thought they were really going to compete with Nike. I remember they were spending a lot of money, and if you take a look at this chart, what does this chart show me is that essentially Under Armour has never really done well. Yet they've started making things look better. It has never really performed if you really take a look at it on the monthlies. Take a look at the daily. It's down here showing some bottoming around 740s. but where is it going to go from there? Yes, I see maybe potentially 9, just not a stock that I want to be chasing after, especially a stock that has that long-term outlook. All right, let's keep going here, guys. What other ones we got to watch? Moderna's the next one on up there, mRNA. Let's take a look here. This has been pulling back here around the 160 level, and I really like this candle that we're putting in today. Washout candle yesterday to that 154. Now we're going to look for that move back up to the 180s. It's not a bad one to keep on watch. Take a look at the weekly also. It's pulling on back there to the weekly level. Now we just want to find a catch. It's a bid and get back through that 180. It's going to be looking interesting. All right, let's keep going here, guys. I see you guys in the chat talking about all different types of stocks. That's what I like to see. Matty Ice, what's up? What do you like? All right, let's keep going. I'm going to make not Starbucks coffee now. I hear you, Dustin. Don't worry about that Starbucks. I'm not going to lie, though. I use their creamer. Their creamer is pretty good, but it's expensive, man. All right, let's continue going. Let's take a look at what else earning stocks are coming on up next week. Let's keep it going here. Let's do Wednesday after the close. We got eBay. Who's still using eBay? Let me know in the chat. If you use eBay, put a 1 in the chat if you used eBay in the last year. Put a 2 in the chat if you ever have used eBay. And then put a 3 if you've never used eBay in your entire life. I want to hear that. I know I have used it, but not in the year. So mine would be a 2. But let's take a look what you guys think in the chat. Let's go to the eBay chart. You guys can see I was charting this one plenty of times. I actually started charting this one to the short side up here, guys, at the beginning of the year. I thought this was a really nice short up here at 68. We're down there to freaking 42. I wish I would have held that trade I did hold it when it broke down through the support, but I sold it that same day and wasn't able to kind of swing it to the downside. Doesn't look bad now. This is the weekly. Let's go towards the daily. The daily has the 200-day really far. The 50-day at least got below it. Now we'll see if 47s hold on pullbacks. But let's see what the chat thinks. What do you guys think? Have you been using eBay? I see 1s. Okay, some people have been using it this year. So maybe I'm not in that, environment, and I'm not catching that. I see some 2s. Crassy's like, I bought some stuff last night, Mitch. Like, do you not go on eBay? All right, so Richard with a 3. Surprise, man. I was wondering if there was anybody. Dustin, haven't used it in years. That's weird. I'm making coffee in here and talk about coffee. Well, Roland, you enjoy that coffee. Brian says 2. He's like me, probably used it a while back, but not as often. We see some 1s in there. Hey, it's interesting. Beach Bum says, I haven't used eBay in a decade. I think last time I used it was close to at least 5 years ago. I think it might have been close to a decade. Who knows? Last Christmas, I needed a specialty gift from the 1980s. Well, that can kind of get you over at eBay. We'll see what happens there. It's definitely been dragging since last quarter. So maybe the bar got lowered enough on eBay. But what have we been seeing from e-commerce stocks? Etsy did not too bad, but you guys saw how Shopify kind of alerted to the e-commerce. Amazon didn't do too bad, but that's Amazon we're talking, right? And if you think about retail, you saw what happened to Walmart. I don't want to see, people get Walmarted. I'm going to call it that because that 10% move definitely spooked a lot of investors. We'll see what happens there. If eBay goes ahead and gets hit on this, we'll see. All right, let's get out of eBay. What other stocks are going to be after the close on Wednesday? So we got eBay. There's Allstate. There's the Hood. The Hood is one that I'll call out. Robinhood. Let's take a look at that here. So definitely Robinhood's going to be one to watch after the bell there. Let's take a look how it's trading right now. Hood coming back there towards $7. $7 was the low there. Now it's just been hanging out here in the 9s. So it doesn't look too bad. Actually, there's going to come a point in time where I might take an investment on Hood. And what I really wanted to see is kind of some slowing down here. But the question is, the reason why I want to take Hood is because I think it is an acquisition target. Question is, what price does it get taken out of? That's the hard part to determine there. But the daily has a nice little level right above it, the 950s. If we can get through there, get back on through that 950s, it won't be looking too bad. So let's see if the earnings can do it, or maybe in the next couple of days, it kind of pushes on through that level. Look for that level to hold and close above. After Robinhood, we'll keep going. Let's go to Thursday. Stock that's been getting just hit hard on the downside, which is Baba. Take a look at Baba. We're getting mentions of lockdown again. And I talked about this big day, right? This is called the DD push. Why does it call the DD push? Because that's when we started getting some positive commentary out of China that I was going to keep watch. Were we ever going to break through that level again was my big focus. That's why I drew that red line there to look at if we broke that, watch out, because you can see some continued downside in Baba now that we broke that and we're not seeing the positive commentary coming out of China. So Baba now down there towards 91.18, broke through the 100, used it as resistance today. Definitely look at yesterday. You had such an opportunity when this was rallying, and boom, from 100 down there towards 91 in just one day. Baba getting hit hard. It's not just Baba. You see JD down big also. You see PDD down big also. So keep these on your radar. If they're going to continue to kind of get hit by the news catalyst, I mean, honestly, even if earnings are looking towards the upside, can you guys play these? It's going to be tough for me to kind of play them. All right, let's continue going. What other ones are going to be mentioned before the open on Thursday? Well, you got Datadog that's been struggling, Cigna, Shake Shack, but Penn National Gaming is the one that I want to take a quick look at. I've been thinking about taking a chance on DraftKings because I like this time. The timing right now is what I like. But take a look here at Penn. We got a lot of support and resistance, easy levels to look at. Above 35, I like it to the upside. Below 32s or 32.80, it's 75. That's where we can get dragged right back down to the lows there in Penn. And if we want to take a look at that, take a look at DraftKings also. You want to see this one kind of perform on up at the same time, leading into those earnings, getting the lift. Why do I like it around this time? Because we're going to get mentions of what next week? Well, you'll get mentions of the preseason starting for the NFL. That could just draw attention to these stocks. We'll continue to watch. And what do you see reports Friday after Penn National before the open on Thursday is DraftKings. So keep these on your radar. They could run before their earnings. And then, of course, buy the rumor, sell the news kind of thing. So just keep it on your radar. It's not bad ones that can keep watch. But, of course, they've been down big year over year. We'll see what happens there. Let's get out of Penn National. Let's talk about Thursday at the close there. We got about 3 minutes till we get to Jay Hatfield, our next interview. Let's keep flowing. We got a couple more here to touch on the earnings for next week. Let me know in the chat. Are you guys enjoying me taking the time about looking at the outlooks going into next week? I think it's important, but you guys let me know what you guys think in the chat. And of course, hit the thumbs on up. Let's see if we can get 150 likes today, guys. I'm pretty sure we haven't even broken the 100. I'm going to take a quick look. But come on, support me, guys. I'm keeping on going. 90 minutes today of jam-packed action. Next one up, Thursday after the close, Twilio. Let's take a look at Twilio. I haven't taken a look at that chart in a while. This is one that I'm always going to look back on because there was a time where Twilio was trading at $30. That's when I first started my investment outlook. I was in college, taking finance, and I was just looking at stocks. I would always hear talks about Twilio. What would they mention? It's like the thing behind the thing, right? Like the data behind Uber and things like that. But I think people didn't understand it back then. And then the story became big. Twilio went all the way as high as 440. Now, did I expect that when I was looking at it? No, let's just be honest. But, back in then, that's when I was looking at it back here. And so now that we're getting back towards 80s, it's actually starting to get interesting for me. What I would take a look at is kind of monthlies. Do we run into some monthly support around here? And so that's the level that I would be watching. And you can see here, we're trying to find some support around the 83, 80, 86 range there. So if we can kind of change this to a green candle, that would be a good eyesight look there. You see nothing but red in a long time. I mean, how long is this now? We're talking about a year of straight down action in Twilio. Can this flip? That's what I'd be watching for on the monthlies, because if this does flip, it's going to be something to keep on watch. All right, what other ones will be reporting after the close on Thursday? You got Lyft and Amgen. This is going to be interesting. Beyond Meat also. What's up with Lyft? I haven't seen that chart in a while. Is it still breaking through the lows? Ooh. Lyft is just continuing the downtrend, guys. After this stock has come out, it's just been nothing but downside action. It tried to come back here, rejected 3-4 times to try to break out here at 55. That was the last one there. And ever since then, it's just been on free fall mode. We'll see if this can come back. Right now, I wouldn't say anything positive, at least right now, for Lyft. All right, what other one can we watch? Beyond Meat. How is the fake meat products in this environment? I remember this was one that I called out when we were in 200, that it could come back to 50s. Did I expect 30s? No, I didn't expect that. But this one definitely got up there. It was starting to break back out there and then just fell off the tape there. Looks like like I like to say sometimes, fake meat, fake profits, but who knows really what's going on in Beyond Meat. It's a tough time, inflationary environment. I just think that, families are making the decision that even though it's a healthier, probably alternative, why are we going to go ahead and spend more money in this environment to try to get that? I mean, it's up to the consumer to determine that. But to me, I think that Beyond Meat needs to get back up above the 33s. If not, you'll probably test back down towards the 28s after earning. We'll see what happens there on Beyond Meat, if it's able to get to that level or not. Last one I want to touch about. We talked about DraftKings at the before the open. The last one we'll touch is let's do, which one do I want to not miss here? Let's do Cinemark. Cinemark is interesting. It had been taking a lift on up and it's holding sideways. That's why I think it's interesting. As you saw it spike up on a rating outlook. Theaters looking better. It's still holding on right now. Needs to hold on to 18 next week. Of course, this is coming on Friday. So we'll see if it's able to make it till Friday and hold towards that 18. If it does, you'll have a nice little flagging pattern here. We'll see if it can get back up above 19s and continue up towards the 20. That's Cinemark Holdings. All right, that's going to do it for our earnings talk today. I hope that you guys had fun and with the outlooks and the overall. You guys can get this earnings calendar also. I'll make sure that we have that pinned on our Twitter. So look out for that, and we'll continue to watch what happens next week, right? All right, so up next, we're going to go ahead and get into our last interview on the day, which is with J.D. Hatfield. Don't go anywhere, guys. I'm excited to jump on in with Jay. We've had him on before. One of my favorite guests, so let's go ahead. Let's dive on into that. I'm going to play a quick promo here, and we'll be right back.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, let's go ahead and give a warm welcome to J.D. Hatfield, founder and CEO of Portfolio Manager Infrastructure Capital Advisors. Welcome back, Jay.
Thanks, Mitch, for having me on. It's always a pleasure. I'm a subscriber, so I enjoy using your service.
Definitely got to believe in the Benzinga Pro. So the first thing I want to talk to you about is, of course, we just recently went through an FOMC conference. What did you get out of this meeting? Did you catch anything from Powell that caught your eyes to talk about with the guests here?
Definitely. We had anticipated the meeting to be a positive catalyst for stocks, simply because it was clear that the Fed had reached terminal velocity with regard to how hawkish they could be. So they couldn't really come up with any incremental way to be hawkish. But what we got was not just that, which would have been neutral, but we got a surprise that Powell, even in the statement, or the Reserve Board in the statement, acknowledged that the economy was softening. And during the press conference, Powell said that they would, instead of saying, oh, we're going to do 50, 75 next meeting, said we're going to be data dependent. And keep in mind that that's 2 months away. And we're going to get PPI, which is going to be, muted because of decline in energy and commodities. So it's pretty bullish that he didn't say, oh, we're going to do 50, 75, and acknowledge that the economy is weakening because the fear, the Fed has been highly incompetent really almost for the last 20 years. So the fear is that they will overshoot and keep hiking even though the economy is slowing. So investors got some comfort that the Fed is aware that the economy is slowing, because often they're completely out to lunch, like the whole transitory nonsense.
Yeah, now that I think the question is really going to start coming to them. Did inflation peak, because at least from what I saw in the PCE data today, it didn't seem like, or at least from the data, that it's showing the peaking. How do you feel about it, Jay?
Well, I think really a secret to overall investing, not just predicting inflation, is to watch the money supply. Monetary base, M1, M2, all three are correlated. And you can do that. It's on the Fed's website every Thursday night. But if you follow that, so you would have anticipated the inflation that the Fed didn't. So they increased the money supply. Basically, it's like raw money. It's really like, I don't know if you ever played Monopoly and put $500 on free parking and then noticed that nobody ever goes out of business and everybody wants to buy everything. Well, that's what the Fed did to us. They increased the money supply by 65%, caused the inflation. But what almost no one is focused on is they've reduced the money supply by 15% this year alone, caused the dollar to strengthen, caused commodities to collapse in most cases, or at least decline dramatically, which will be slowly, to your point, slowly reflected in first PPI, which is producer price index. And that's a leading indicator of CPI, which is the consumer, because obviously the consumer goods are made out of raw goods. So that's why I feared that the Fed would be out to lunch, because inflation is a lagging indicator. It drops after the economy has slowed dramatically or gone into a recession. So if you just look at CPI to say, oh, should we stop or not, then you're always going to create a recession.
Yeah, definitely. Now, what position does this really put the Fed in moving forward? Does the rate of the hike rates change with the PCE data that we got today?
I don't think that data will be that critical, because it was definitely, it's last month's data, and you don't have to be very analytical to figure out, well, the inflation was raging till the middle part of last month. Commodities only started coming off in the middle part of June. So the real data and the market will react strongly one way or another is CPI, PPI that comes out in mid-August. And so if that prints hot and I'm wrong that the PPI is going to cool down dramatically, and even CPI a little bit, if I'm dead wrong about that, then that would be a negative for the September meeting, and you might get another 75 basis points. If I'm correct, you might even get 25, which would cause the market to rocket higher.
Interesting to watch. I mean, the markets are holding on up. It's been interesting with the earnings, right? A lot of people were looking for really, really bad earnings, and it just didn't seem like, we haven't kicked it out the waters, but they've been good enough to, bring us back above the 400 on the SPY. Do you feel that the bottom essentially has been placed in?
Well,
at least for the year.
What's super bullish is that the 10-year has stabilized, because the fair value on the S&P is highly dependent on the level of interest rates. And that's why we really had the worst 6 months ever, because you had both interest rates rising and the stock market dropping. So that stability, we have a fair value model, which is a discounted cash flow of the earnings of the S&P. And that has risen almost 400 points. So right now it's about 4,600 on today's Treasury. So we think there's pretty substantial upside in the market. And to your point, earnings are very resilient. The economy is not booming, but we're not in recession. And what a lot of people forget is that most of earnings growth comes from companies retaining earnings, buying back shares, and building new McDonald's or building new factories, not necessarily from a booming economy. So we think that U.S. companies will continue to do well. And so there's pretty substantial upside to the market. The only caveat, which is a big caveat, is September and early October is what we call hedge funds gone wild. So hedge funds tend to be too negative about everything. So, and there's certainly things to be concerned about: recession, overly hawkish Fed, raging inflation. So as we get through earnings season in August and past those inflation reports, typically the market weakens up. But my best guess, and it is only a guess, is that we bottom out where we did already in June, somewhere around 3,600. But almost everyone believes that 3,400 is a good potential bottom, because that's kind of the pre-pandemic level. So you would have had then a full pandemic bubble in the stock market and then going back to that level.
Yeah.
So we're constructive, but just with the big caveat that normally late August, September, October is time for volatility, downward volatility to emerge.
Perfect. Now, the last question I have is an interesting question: did anything surprise you this week? I think it's an important thing to kind of notice when we get surprised. What caught your eyes today or this week?
Well, what was critical this week is what we call MAGA earnings. It's not a political statement. It's just an easy way to remember the 4 companies that have $1 trillion market caps. So that's obviously Microsoft, Apple, Google, and Amazon. And I guess to have all 4, you could argue whether the earnings are really that great or not, but to have all 4 stocks pop, even Microsoft, which arguably missed, was a very bullish sign that people have gotten too negative about the economy, too negative about tech spending, and that most of the weakness we've seen is very focused on low-income consumers, and then the advertising market, particularly focused from companies that are startups, like cryptocurrency companies that might advertise more on Snap than they would on Google. So there's a focused slowdown, but it's not a broad slowdown. So that was super bullish and surprising to have all 4 companies. Usually to have at least one of those 4 would have some problem or some disappointment.
Definitely. I agree with that, Jay. That's something that I was watching, and I was calling it in the beginning of the week. I was like, well, I mean, there's a bunch of companies, right? Maybe one of these misses. What's the probability of one of them, just coming down significantly? I felt that the odds were better in that favor starting to the week. Seems like I was wrong on that. It seemed like they held up pretty well. Is there any earnings that is definitely on your radar next week that we should not miss?
Well, most of the dramatic earnings reports from individual companies that could drive the market are behind us. So we focus much more on stocks that may seem boring, but are a great way to generate income and stable returns. So REITs, mortgage REITs, most of them are reporting next week. Utilities. So, but particularly the REITs, because a lot of hedge funds and other bears think that the bottom's falling out of the real estate market, and we just don't believe that's the case.
Yeah, I agree with that. I mean, I've been talking about it on here that I've been watching the ITV and seeing how the construction stocks, at least here, have been holding up really well. Is there any insight that you can give to me on that, Jay? Why are we seeing this, yet we're seeing so much negative catalyst out there?
Well, I guess what I would offer up that very few people talk about is that normally in a recession, there's a big desire to declare a recession, partly because people love to be negative and partly there's some political motivations. But the critical thing to keep in mind about recessions, they definitely are precipitated by the Fed, so it's relevant to be nervous about it. But typically you get huge inventory overhang in both housing and autos and energy to some degree. But it's important to keep in mind we're at all-time lows, and this is back to the 60s, of houses for sale, about 1.2 million existing homes. And autos are all-time low because of the pandemic. We only have 90,000 autos in inventory versus a million. So the chances of those highly cyclical sectors having mass layoffs are extraordinarily low. So I don't think a lot of investors have focused on the fact this is a very, very unique time where the normal cyclical pattern is very unlikely to unfold. And it's much more likely that we'll have a deceleration because of the reduction in government spending and tighter Fed policy, but not the normal crash like we did in 07, 08. We had 4.5 million extra homes, and now people argue that we're 3 million short of where we need to be. So those are huge underpinnings to the economy. If you're an investor, you should not get too negative and not fall into kind of a bear thesis around the deep recession, because given those factors, it's extremely unlikely, in our opinion.
Thank you. I definitely appreciate those comments. I've been thinking about it, and I think you literally alluded to the actual thing that I think is also affecting the markets. I mean, high supply and then demand coming down would cause an issue. But if you have such low supplies and then demand coming down, it really could hang on for a little while. We know that the market, especially homes markets and housing, likes to lag. So if we can get through these rough times, who's not to say that it doesn't just continue on the uptrend? We'll see what happens there. Jay, I'll definitely have you back on like always. Appreciate Jay Hatfield, founder and CEO, portfolio manager at Infrastructure Capital Advisors. Thank you for always coming on, Jay.
Thanks, Mitch. It was great.
All right, guys, that's going to do it for us on Stock Market Movers. It's 2:01. That means we went over 90 minutes. So please do me the favor, guys. Hit the thumbs on up. And Eric E. Wilson, you want to come on and talk and interview with me? By all means, reach out to me, Mitch at Benzinga, or reach out to my Twitter. I got no problem bringing you on. If you want to talk about some trading or maybe some strategy out there, whatever you got, Eric, let me know. I'm more than happy to have you on here. All right, that's going to do it for us today and for this week. I hope that you guys enjoyed Stock Market Movers. Stock Market Movers is where we give you guys all the headlines that are out there in the intraday, and of course, get to our expert opinions. We had 3 guests on today in a 90-minute period. I hope that you guys enjoyed the fast pace and action-packed to this show. Literally, this show leaves me feeling a little bit drained, and that's how much energy I try to put towards it. So I hope that you guys appreciate that. Hit the thumbs on up. Next up is the last moon or bust ever. So go find out why it's the last moon or bust and continue on going right here on Benzinga.